The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 27th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there is having a great day, off to a great start. Let's make sure that you and I, that we do everything we can to get everything out of our wonderful Wednesday. I know I'll do everything I can during the next hour to share with you extraordinary tools that help you and I to identify where price is headed to. We'll utilize that lightning bolt pattern, the A to B equals CD pattern. We'll utilize Fibonacci expansions and retracements. We'll utilize Japanese candlesticks. We'll utilize the Chapman wave. We'll utilize the TAS market profiles. We'll take a look at swing points. We'll utilize every tool we can. And, of course, you can give me a call at 877-927-6648. That way, together, we can take a look at a stock chart. We'll look at channel lines. We'll look at horizontal areas of resistance, vertical areas of resistance, you name it. We can do it out here. It is Wonderful Wednesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, the Dow is off 11 points out there. Hey, what's up with that? It's trading out at 17,095. S&P back 2 points, 1 point. Trading at 1998. NASDAQ Composite off 6, trading at 45.64. Russell 2000. Down 2 points at 1173. New York Stock Exchange up a couple points. Boy, was the New York Stock Exchange strong yesterday or what? Big market breadth inside the NYSE. Heck, even today you still have 200 net advancing issues out there. We've got gold back $1.30, silver off a penny, light sweet crude up 20 cents, natural gas up a nickel as we speak right now. Get our call number 877-927-6648. Let's do this here. Let's go hunting for bull and bear. Let's put up one of our clean charts out here, and let's go take a look at what took place actually yesterday, because all the wonderful hoopla about the advance in the markets, but what kind of candles were actually formed as we take a look at the markets. Let's start off. Let's take a look at the Dow Jones Industrials out there as we take a look at it. And here we're just taking a look at only Japanese candlesticks just to identify areas of support and resistance. Here's what we know. The trading session of July 17th out there, big old bear sash candle. This is where the bears last showed up. And what did price do yesterday? Looks like a shooting star, smells like a shooting star, but it was not. The wick of the candle, not really twice the size of that body out there. Nonetheless, price ran right into resistance at the top of that bear sash candle. Taking a look at the Dow Jones out there. So no reversal signal or anything yesterday, but price did stop at a natural resistance level. Let's take a look at the transports out here. The transports here over the last several days have given us an indication, really since the trading session here of August 19th. We have bears that are camped out here inside of the Dow Jones transports. Began with the shooting star candle on August 19th. Little dark cloud cover that took place on August 21st. Little doji candle up in this resistance zone out here that took place on August 22nd. Yesterday, a bearish engulfing candle out here. Today, so far, a little bit of ambivalence. So the transports are starting to communicate to us that there's a lot of bear hanging out right here in this area off of that move higher out there. Something to think about. Let's go take a look at the NDX 100. Let's go take a look at the strength inside the NDX 100. We could go hunting for bear. We're just simply not going to find it out here. No bearish reversal signal. In fact, we had this little doji out here at resistance. Price got above it. That was from August 22nd out there. So we've got no reversal signals at all whatsoever inside of the NDX 100. I'll go over to the NASDAQ Composite as well. Same setup out there. No bearish reversal signals. You would get one today. Any close today below yesterday's open, 45.6381, and you would have a bearish engulfing candle. If intra-session you were actually to see a spike below 45.5678 and any close lower, what you would get would be a key reversal session when markets are truly in an overbought status out there. So something to pay attention to. Let's take a look at the Russell 2000 out here, the Russell 2000, nothing bearish about the candles that are out here inside the market. Let me pull this a little bit further to the left out here. What the Russell 2000 does have is this little gap down on July the 8th out there. That should be resistance. That's right around the 1184.70 mark out there inside of the Russell 2000. Whoops, I didn't mean to do that. I meant to actually do this. Let's go take a look at the semiconductor index, which has been on fire. That has been long and strong out here. Oops, what got in the way? Some bears have gotten in the way. As this was making this ambivalent candle, looks like a doji, smells like a doji, but is not a doji candle. August 21st, it's a high wave candle out there. What's that mean? Well, it means that the market has lost its way out there. You see the body of that candle just a little bit too much to really be considered a doji out there. So you've got a resistance up near the level where price last broke down inside the semiconductors. That was on July 23rd out here. It didn't get all the way up to that top, which is at about the 645.50-ish level. But what we are seeing here inside of the stocks, we are seeing the signs of at least a ensuing retracement, because now today, yesterday really didn't have any kind of follow-through, but we are seeing some of that follow-through as we speak right now. So the semiconductor is starting to act a little bit weak. Why do I keep doing that? What I meant to do was now go over and take a look at the S&P 500. Let's go see what kind of signs we've got out here. So as the S&P 500 was doing its moon dance yesterday, as it was off to the moon, getting above that 2,000 level, hey, the candle that had formed out here, our first bearish candle, a little shooting star. Now, a shooting star is that long-lost cousin of the hammer. Long lost because I don't know why it's long and lost, but it is a reversal candle that takes place from a long standpoint as the market is moving higher out there. So that is a important candle. Today, if you were to see it close below yesterday's open, 1998.59 out there, you would have a shooting star and a bearish engulfing up at those highs out there. Is it communicating the message? It's telling us here that the in a very subtle way, you can't just trade just based on candlesticks. No. But do we pay attention to them? We absolutely must pay attention. Isn't it kind of interesting here? Because probably this is perhaps the only place that you heard it. All that we really heard was the celebration of what price was doing. Nobody was really paying attention to the actual candlestick that was formed out there. Yet it is the bulls and bears' responsibility to leave us signals, to leave us little hints out there. So you've got, we'll see where today closes, but you did have a hint in the S&P 500 with regard to what it was doing yesterday. Now, I think that covers, almost closed it again, but I caught myself out there. Let's go take a look at the XAU. Let's go see what it is doing out here. The XAU yesterday forming a nice bull sash candle. We saw the beginning of a move. Was it just a counter trend? Was it just simply the bulls coming into a natural area of support and buying? That's referring to gold out there. Silver really had failed at a resistance level yesterday. Look, we saw a nice little bullish candle out here inside of the XAU. If, in fact, we are seeing a reversal inside the metals marketplace out here, the XAU has been consolidating. You can take the XAU all the way back really into June 24th. What are we at, August 27th? For 2 solid months out here, you've seen a consolidation inside the XAU from about the 97 level up to, you'd have to say, the consolidation to the 105 level. So what do we got? What did I say, 97, 105? So 97, you've got the 3, 97, 98. Boy, you'd think I could do this a little bit quicker. So you got, about a $6 move out there, $8 move out there, 97. Yeah, I should be able to do that pretty quick, right? $7 move out there. What the heck is going on inside my mind? I think no food in the stomach out there. That's the deal. So you got a 7-point consolidation inside of the XAU. Hey, take a look at these candlesticks out here. A little dark cloud cover back on July 10th that had marked the high out here. Evening star reversal candle formation back up here on August the 13th. Take a look at the bottom here. Got this nice big, for the only real bullish candle, we had this nice bullish engulfing candle July 25th, one yesterday. So this is nothing more than a consolidation out here, and a break to either side should give us a measured move equal to that price range, which looks like it's about $7 out there. Hey, I almost did that again. So that's what's going on inside. Let's take a look at the VIX index. I don't know that the VIX is going to give us much information here. And no, it has not really. We've seen just a slight move higher out here. No bullish candle configuration or anything along those lines. Let's go take a look at the ETF structures out here. Let's go take a look at the XLK. Let's go. And all we're doing is just hunting for bulls and bears. Right now, we know price in the XLK got above its bearish reversal signal from July 30th out there. That says that the top of that should be support. That's right around the $40.08 level. You're trade at 40.07 right now. So if that fails, if price gets below that level there, then what you could say is you could say that the breakout inside the number one sector, waiting inside the S&P 500, was a false breakout. That's what would be the information that this chart here would be communicating to us. If we go take a look at the XLF, the financial sector out here, let's go see what it's doing. If we look for bullish or bearish reversal signals out here, well, you can see the bullish reversal signals along the bottom back here on August the 6th, back here on August the 8th out there, piercing candle, bullish engulfing candle session out there. We have not seen any. We saw one bearish reversal signal, never got any follow through. That was on August 15th. I'm referring to that move up. However, today's a different story. If in fact you were to see a close today below the open of yesterday, that's out at 23.30 out there, then the market would be communicating to you, you need to wait for follow-through on the very next trading session, but you would start to begin seeing your first reversal signal inside of the financial sector. I believe it's the XLV that is our next weighted structure inside the S&P 500. Nothing bearish in sight here as we look. If anything, there is support at this little rising window, that little gap up that took place a couple days ago on August 26th. This says it should have some pretty good support at 63.17. It's trading at 63.66 right now. That's on the XLV. Let's go take a look at the energy sector here, the XLE. Let's go see what it is doing. Yesterday, rising window, a little gap up, going into what? Going into a falling window out here. Was not able to close that gap. That gap being the low out here from the trading session of July 30th. That low is priced out at 98.44. What do we know about the XLE? 98.44 is resistance. Getting above that would bode well for the energy sector out there, which is arguably one of the weaker sectors inside of the S&P 500. Let's go take a look at the utilities out there. The XLU, the utility sector yesterday, giving us a bearish engulfing, the second one in the last 4 days out here. The utility sector now struggling as it made its way back to its most recent swing point from July 29th. Let's go take a look at the building materials sector out there, the XLB. Today it is forming a bearish candle, potentially forming a bearish candle. So long as there's a close below 50.39, you're trading at 50.35 right now. That would give you a bearish engulfing. And then we've got the XLP. What one is that? The consumer discretionary or the consumer staples? I get those two mixed up. Hey, take a look at this little shooting star. Remember that long-lost cousin of the hammer candle? August 21st. That's your area of resistance, the top of that session. 45.15. This is Steve Rhodes. This is TFNN. Those are your Japanese candlesticks. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Flat market out here. Dow's up a couple of points. S&P down 1. NASDAQ Composite off 4 points. Russell down 75 cents. So let's go spend some time taking a look at some of these stocks here that are moving to the upside and to the downside out here. Let's take a look at Solera Holdings. SLH is the ticker symbol. Ouch. Down 9% off $6 today. This is the daily chart that I'm going to pop up on my screen here. Looks like they were out with numbers after the bell. Net income $8.76 million versus $18 million. So they are struggling there. Let me see their top line revenue $267 versus $218. Man, they got a spending problem out there. Let's take a look at this equity out here. Looks like they spent all their money marketing. Now, if we look at this stock chart here, let me just go ahead and clean this up here just for a moment. Let me edit this. I'm going to turn a couple things off because I can always turn those back on. So we're going to turn the TAS boxes off. We'll turn off the moving averages, and we're going to get an idea for what this equity is doing. And what we can see here is that this thing has really been consolidating. Now, this broke out with wide price spread and accelerated volume from the trading session of November the 6th, this back in 2013. And the breakout was with 840,000 shares out there. Now, the pullback so far this morning back into that area. It has been 295,000 shares, only trading for just slightly under an hour right now. So it's pulling back with volume. Pretty good chance that the 58.88 level is going to get tested. Now, before price gets down there, volume backs off, generates less than 840,000 shares down there, then we might be seeing a consolidation inside of this equity. Let me pull this back a little further, see if there's anything else out here that might be super dangerous. Let me put this on a weekly chart. This is Solera Holdings, SLH is the ticker symbol out here. And as we look at the weekly chart, let's see if this trend, looks like this trend, I'll use a trend line out here, then maybe we'll take a look at the channels. As we take a look at the trend right now, that trend line has been broken today. So could be a little bit more serious damage. That's a weekly chart. I take that back. We're looking at a weekly chart. We got 2.5 trading sessions, more than 2.5 trading sessions left in the week out here. So we'll see what happens with Solera Holdings. It's trading right now at 61.40. The expectation if this trend gets broken ought to come all the way back to that breakout week, meaning the low of November 4th out there at the 56.15 level. So 56.15 to 58.88 ought to be some decent support for this equity. Price line is down this morning off 560. Let's go back, put this on a daily chart, see if there's anything of significance out here inside of price line that we can see. And at this stage, I have to say the answer is no. It's got a high volume high that has not been tested here recently. So it made a high back on the trading session of August the 11th as it got out to 13.29. Now, not an all-time high or anything along those lines, but nonetheless, this thing broke out here. Nice wide-ranging bar on August the 4th out here. So I don't see anything bearish necessarily with price line PCLN. Pioneer Natural Resources seems to be up, seems to be down. Today is a down day. It is pulling back volume so far today, 376,000 versus yesterday making high with 1.5 million shares out there. This thing still has this high volume bar from the day of August the 14th. It's tested the top of that. Maybe it'll be a test and rejection of that area. Pioneer Natural Resources, though, has been struggling as of late. Its volume bars, for the most part, they're all to the downside, meaning the trading session of August 1st, the trading session of August the 5th, and the trading session of August the 14th. So yesterday was a bit of a try, an attempt to change that, but it's got more volume to the downside than to the upside. The positive about Pioneer Natural Resources is this little sign of strength out here where price pulled back into right in that $200 even Steven type level out there. PXD was the ticker symbol there. VIP Shop Holdings, that's off about 2%, down $4. Let's look at that on a daily basis out here. This does not look bearish, at least not just yet. Has not even broken a swing point or anything along those lines. So just a natural pullback going on this morning. Not a big deal. Biogen, BIIB, that's trading off of about 1%, down $3.75 out here. Biogen having a nice little sign of strength out here in the trading session of July 23rd. Had volume of 4 million shares to the upside out there. On any kind of pullback, we need to see how this candle session from August 12th, its most recent swing point, gets handled. That's down at about the 317 level. Right now, the Dow's off 7, S&P is down 2. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 5, S&P is off a buck, and NASDAQ Composite down 4. And Mitch, have a great day out at the beach eating clams and onion rings. Folks, if you haven't had a chance to test drive the Tiger's Den out here, come on over to the homepage at TFNN.com. Extraordinary group of, it is a peer group is really what it is, and a great group of individuals inside of the Tiger's Den. You can test drive that for 30 days. We've got gold off $2 and silver down 3 pennies. So let's go back and take a look at gold. Let's go see what it is that we know about Goldilocks out here. Let's go see what is brewing now. I've got the delayed version on my screen right now, but let's just take a look at the weekly chart out here. The weekly chart, we've got our nice rising price channel out here. A rising price channel. Price has hit that level. That's where we saw it's a natural area for price to bounce. So we then started. That's the weekly chart that we're looking at. No, nothing bullish about this other than price has held the rising price channel. So I guess that's somewhat bullish. No bullish reversal signal or anything like that. Trading below the market profile lows out there. So we know that that's what's going on. Let's go take a look at a daily chart, see if there's anything we can find out on the daily chart for gold. We take a look at gold right now. Looks like it is forming a new market profile here today, saying, close below 1276 would not necessarily bode well for Goldilocks out there. We know that there is the potential for a move down to test its swing point back here from June the 3rd. And if it takes that level out, 1194 would be in the cards. If we take a look at yesterday's candle session, bullish engulfing candle for sure. It would have been much more powerful to have closed up here at the August at its high for the day. It did not do that. That would have given us that nice U of M pattern out there, a pattern that's been associated with many bottoming patterns in the marketplace. Nonetheless, the close was high enough to actually form what's referred to as a three-river morning star. This happens to be a four-river morning star. So we know the bulls are out trying to defend their territory there. If we take a look at the 300-minute chart out here, what's the 300-minute chart going to show us? Now, the 300-minute chart, the red horizontal lines going across my screen, they have acted as resistance all the way down, meaning, so let me pull this back. Not really all the way down, but all the way down off of its most recent high. That little doji on the 300-minute chart, the 5-hour energy chart from August the 8th out there. Voila. Yesterday, that level was pierced. We actually saw not just a test of that area, but we saw a close above that. That took place at 2 in the morning. Price then proceeded to continue to pull back and get back inside it. However, if we see another close today, tomorrow, above its new 5-hour energy market profile high of 1287, I would have to say that it's an indication to me that the change in trend has taken place inside of Goldilocks out there. So you'd have a second time period where all of a sudden the resistance areas are being taken out. You'd like to see those resistance areas act as support, but really it's the low that needs to act as support out here as well. So the number I think to be watching inside of Goldilocks is 1287. If we go do the same kind of thing and take a look at the silver, really trading flat here this morning. If we look at the weekly chart, let's start off with the weekly chart out here. I don't know what those blue lines, what I did there. I just probably extended something. Let me try to delete them. There we go. What we know about silver is silver, if you take a look at yesterday, it had a nice pop in the morning. It gave that all back out here. There is really nothing bullish about silver. It's trading into the swing point out here from May the 26th. That's its swing point low. There was a little hammer candle out here on the weekly chart that formed back here on April 28th. But let's not pay attention. That low, by the way, held. So that's an important low. That was a price level of 1879 out there is that area. So nothing on a weekly chart that looks bullish with silver, same as we took a look at gold. If we take a look at the daily chart here, the daily chart didn't even had a chance. I mean, they talk about narrow-bodied candles, meaning the session from August 25th. It had a chance. The bulls had a chance to form a bullish engulfing. They did not. They did form a little dark cloud cover, but the body of the candle so small, it's somewhat irrelevant out there. So nothing really bullish on the daily chart. If we go take a look at the 300-minute chart, the 5-hour energy chart for silver, what we can say is that silver has been able to hold its market profile lows out here. So that is pretty good. However, it really gave back all those gains yesterday between 5 a.m. and 10 a.m. in the morning out there. So silver's got its work cut out for it. But we can say it's holding the lows out here. So it's really kind of a relatively, on a shorter-term chart, really somewhat of a bullish sign that those areas are holding inside of silver. Those levels being the 1940 to about 1938 type of a level out there. And that's what's going on inside the metals marketplace. Let me see what else we have. Let's take a look at all the, not all of them, but let's go take a look at some currency pairs out here. Let me pull over these charts here. Let me pull over my Ensign Windows charts. We'll go take a look at currencies. How about the U.S. dollar Canadian currency pair out here? This thing here had formed a nice little Gartley buy pattern, a 0.618 Gartley buy pattern. It formed that back on the trading session of July 2nd, 2014. Now, remember, all Gartley patterns have 5. Let me see if I can erase the these lines here. Those are the primary trading range boundary lines, but I'm going to go ahead and delete those. There we go. So now we're going to take a look at the U.S. dollar Canadian. And what we can see, it had that Gartley buy pattern. Now, all Gartley patterns have 5 potential outcomes. One of those outcomes is the 0.382 retracement level. 3.382 retracement level, $1.08. It got to that area, did it with a wide-ranging bar, went up towards that next level, which would have been $1.10. That's your 0.618 area. It is struggling here this morning, probably as currency pairs go, the largest movement that we have seen inside a currency pair. And as long as it's able to hold above the low from August 15th out at $1, 1.085 out there, that will be okay. It may just be setting up its next round to just simply move higher and test that $1.10 level. So nothing. It's got its work cut out there. You can see the bearish candles out here. If I blow this up just a tad, as it was making its high, you've got this little bearish engulfing candle out here from August the 11th. That's what really set up the resistance area. If we draw a line across the top out here, that's how you use those candle sessions. So you can see that's where your resistance level is at. Yesterday it tried to take that out. It couldn't do it. Is there an area here where there's any kind of bullish reversal signal? Not really. Not really out here. If anything, I would just probably take a look at, let me pull this back here, this little price channel. That's what we should do. We should draw in the little price channel out here. Now, the easier way to do this is with a little line tool. Let me see here if I can get right from there. Does that work pretty good? Let me draw this, extend this thing back. What we can see, looks like to me that's a pretty decent channel. I'm not going to go ahead and use that parallel tool to draw the channel line in here. Let me see as we take it off the top out there. Yeah, I'd have to say that this is okay. Let me get rid of the actual line. There we go. That the U.S. Canadian dollar has broken that little rising price channel that it has been traveling in. So maybe this is going to see a little bit deeper pullback. And that pullback here, natural pullback, would be where? The 0.382 level. So that's $1.08, and then 0.618 as $1.07 out there. So can't tell what the U.S. Canadian dollar is doing. We know where resistance is at. Could be pulling back to the 0.618 level in order to be able to sell, in order to be able to create its next A to B equals CD pattern. That would give us if it does that, pulls back to the 0.618 level, that would then give you a point. It would be setting up a 0.786 Gartley sell versus the 0.618 Gartley buy pattern that it had formed back here in early July. Let's take a look at the other currency pairs, the Great British Pound, U.S. dollar. I don't recall if I covered that during this show. I know I did the last show. You got the bulls really out here defending their territory at a nice little key reversal session, bullish engulfing on August 25th. It did not confirm yesterday, but boy, today you've got the bulls truly defending that price area of about $1.65 out there. Let's go take a look at the U.S. dollar Japanese yen. U.S. dollar Japanese yen, it's made the 1-to-1, then the 1 to 1.272 A to B equals CD to the upside. I don't see any real reversal signals here. Looks like the U.S. dollar Japanese yen probably wants to begin to target the 104.73 area. What we know about this currency pair, because it's in an extreme overbought condition. So this candle movement up here over the last 4 trading sessions, 5 trading sessions move sideways to higher. That's more bullish than bearish. And what we also know about this is that it has broken a nice descending price channel or trend out there, the red diagonal line going across my screen. So that bodes well for the U.S. dollar Japanese yen. Let's go take a look at the queen out here. Let's go take a look at the euro U.S. dollar. Hey, how about that? The bulls now showing up inside this currency pair. Let me just make sure I've got everything updated here. I do. Hey, today you've got a bullish engulfing candle that is formed inside of the euro U.S. dollar after making its 1-to-1 A to B equals CD to the downside out here. Now, a close above, or an intra-session spike, I should say, really, above 1.3213 out there. You'd also have a key reversal session after making a 1-to-1 A to B equals CD to the downside out there. That ought to put a little bit of pressure on the U.S. dollar index. If we go take a look at the U.S. dollar index right now, the U.S. dollar index already has a key reversal session. So the combination of the yen, the British pound, the Canadian dollar, and the euro out there, of course, the only two left would be what? They would be the Swiss franc and the Swedish krona. because you've got 6 currencies that make up the basket that represent the U.S. dollar index. So you have, at the highs, you have a key reversal session, bearish engulfing candle in the U.S. dollar index after making a 1 to a little bit more than a 1 to 1.272A to B equals CD to the upside out there. And that covers our currency pairs. Well, not so fast, right? Hey, how about that? Speaking of not so fast, we've got college football this weekend. How about that? Now, that is, other than the Little League World Series, no, I'm just kidding. College football, there's nothing like college football out there. So looking forward to this weekend for sure. Let's go take a look at your favorite currency pair and mine. That is our Euro-Japanese yen. Let's go see what it is doing out here. The Euro-Japanese yen out here trying to get a little bull run out here. Nice little bullish engulfing candle that has formed as we speak right now. Now the Euro-Japanese yen for this, because of its correlation to the market out here, the Euro-Japanese yen needs to really begin moving higher out here. It's really continuing to make lower highs, with the exception of this last couple of trading sessions where it's really got more of a consolidation pattern in place out here. But the bulls are trying to defend their territory inside this currency pair. Why is this currency pair important? Really because of the way that it tracks the U.S. market. Speaking of tracking the U.S. market, let's come over here and take a look at General Electric. Because General Electric has not participated inside this move to the upside inside the Dow. It is up 9 pennies here this morning. But let's go check in on its stock chart and see what it is doing. As we take a look at GE right now, we can see GE has been traveling inside. This is a weekly chart. Let me put the daily chart. But in the weekly chart, you can see the descending price channel. It is probably better viewed on the daily basis out here. Now, that's a price channel that takes us back into the highs for General Electric back on June the 9th out here. And price yesterday broke out of that little sub-correction price channel that it was in this morning. Just a little bit of bounce. Yesterday was down with volume of 26 million shares. This morning, an hour and 28 minutes or so, up with about 6 million shares. But GE is moving to the downside. That does not bode well for the U.S. stock market. What you want to see from a bullish standpoint is you want to see price get above that descending price channel today, which it likely will not take place. That's 26.50 or so. Tomorrow, it's probably, we'll use 26.50 for the next couple of days out there. That is what's going on inside General Electric. As long as we're here, let's take a peek around, see what we've got inside of the sectors. These are the top 10 holdings with inside each of the, I've only got 8 of the 9 sectors up here. I've got to rebuild the utility sector, I believe. Yeah. Well, let's take a look at Microsoft. I haven't looked at Microsoft for a while. It's down 7 pennies out here. Let's go see what it is doing on its daily chart. It is Microsoft, what a strong stock chart out here as of late. This is the daily. Right now, if we just take a look at levels that it needs to contend with out here, let me put all of the tools back up on the screen out here. Let's go take a look at its market profiles, get a feel for what it's doing. So traveling with inside the box that says 44.44 ought to be pretty good support. Of course, this had a nice move higher, little breakout session back on July 15th, July 16th, and July 17th out there. Right now, we take a look around the markets out here, we'll see relatively flatness out here. We could go barefoot water skiing if we were skiing on Lake S&P 500. It's down 20 cents. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is up 8, S&P is up 10 pennies, NASDAQ up 39 cents out here. And as folks take in the last few days of summer, of course, those are folks that don't live in Florida. We got lots of days of summer that are left here. Let's go be careful out there and enjoy yourself for sure. And let's take a look at the ES Mini out here. Didn't cover this during the during the second hour because I covered it in such detail during the first hour out there. If you didn't get a chance to catch the first hour, I would recommend, especially if you enjoy technical analysis, if you want to understand a series of tools. When we start with a blank chart and different tools that you ought to learn, use, put in your bag out there, go listen to the first hour, at least the first half of the show out there. That you can get archived on Channel 9. If we do take a look at the ES Mini, one of the things that we pointed out and really was utilizing a basket of tools. That's using the Rhodes Momentum Indicator indicator tool out here. That's the red and green little signals on my system. Let me just update the chart out here. We took a look at the TAS market profiles to assist us. We've taken a look at the Chapman Wave count. We've got just a little bit of everything. Now, what we identified was the areas of support inside of the ES Mini. And our suggestion was that 1993.80 level should act as support. What we actually saw was a push down into the 1994.75 area. That happened to be the point of control using our market profile out there, the largest area of congestion. So that's a strong area of support. Now, we actually, what my expectation would be is that we're going to see some type of move above the 2002.75 area out there. Might be 2003, might only be a quarter, might just be one tick away from doing that, but that would give you your fourth leg of your Chapman Wave on the way up. So what needs to take place in order for that to happen? Well, we did get our on the 120-minute time frame. That's what we're looking at right here. We did get our Rhodes Momentum Trading Indicator out here. This little green candle that formed here during that 10 a.m. session. If you get it close above that high, which is 2,000 out there, that will give us that indication that we should see some type of higher high inside the market. If that starts to act as resistance and you start to see closes below the low of that candle session, 1995.75, then what you can expect is some lower prices coming at you, and likely the area where price will hold, and I've got to pull this 30-minute chart up on my screen because I don't have it labeled on the 120-minute chart out here. You're likely to see the level of 1990, 1987, 75 be the levels that hold as support. If we see price close below those levels today, I don't care whether it's summer trading or not, that could create some real problems inside of the market. I don't expect that's what we will see as we speak today, but those are the areas, those are the levels to be watching. And at this stage, the little early push lower this morning was doing nothing more than moving down to levels of support, utilizing the 120-minute time frame for the S&P 500. So, folks, it is Wonderful Wednesday. That means we've got a great lineup for you, because following this show, we've got our man Basil Chapman. You want to make sure that you take him out to the beach with you. That's Mitch. He's on his way out to the beach out there, because you want to be able to ride the Chapman Wave. Following Basil, we've got Larry Pesavento. Following Larry, we've got Daryl Martin, David White, the Tom O'Brien Show from 3 to 5. And have yourself just simply an extraordinary, wonderful Wednesday. I look forward to seeing you tomorrow morning. Take care, folks. Have a great day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.